Hey everyone, in this video I'm going to make an interesting comparison. I'm going to look at which one is the better explosive growth stock to buy. Is it Plug Power or is it DraftKings? I'm going to look at each of these two companies by first looking at their latest quarterly earnings results. Then I'm going to look at a bit of a longer term operating profit margin comparison. And finally, I'm going to compare their valuations, look at which stock is more expensive to make the final decision which growth stock is the better buy at the end of this video. Let's get started with Plug Power's most recent quarterly results, which saw its revenue increase by 49% to 210 million. The net loss worsened to 207 million, up from 157 million in the same quarter the prior year. Plug's liquid green hydrogen plant in Georgia will finally complete commissioning and ramp production in the second quarter. Many investors in Plug Power stock have been anticipating this increase in production. The company has over $1.6 billion in cash to bridge the gap between revenue growth and profitability. Meanwhile, DraftKings saw its revenue increase by 84% to 770 million in the most recent quarter, with its net loss improving to 397 million, up from 467.7 million in the same quarter the prior year. DraftKings needs to get approval from each state before it can gain approval to operate in that state. And when the company does get approval in a given state, it invests aggressively in sales and marketing to let the people of the state know that they can now sign up to DraftKings and make wagers online. So that initial upfront investment is primarily what's been causing DraftKings to lose so much money on the bottom line. However, in the longer term, once DraftKings expands to as many states as it thinks it can reach, right now it's still at less than 20 states in terms of mobile sports betting and iGaming. It can eventually get to somewhere in the 40s. It's never going to get to all 50 states, but it can grow to a lot more. And once it finishes those initial investments, profitability could improve down the line, but that's a big if, and that's many years in the future. But so far, the company's growth is going well. Management raised the guidance to 3.2 billion in revenue expectations for the year. That was up from the previous expectation of just 2.9 billion, so 10% better than the company expected. Now, looking a bit term, looking at their operating profit margin going back to July of 2020, looking at their operating income going back to July of 2020, you can see each of the companies has been losing more and more money. That is until around July of 2022, when DraftKings start to see improvement in terms of its operating income, while Plug Power is still just going downward, losing more and more money on the bottom line with each going quarter. DraftKings, however, has started the improvement, and if it continues at this rate, it can achieve profitability in the next, I don't know, 6 to 12 quarters, depending on how ambitious the company is with its expansion. Is it going to give up on some of those states that it's having difficulty entering? For instance, California, the company made a big expensive effort to get sports betting legalized in California in 2022, and it was a big failure. It barely even got it barely got votes in the double digit percentages, and it was widely shut down. So will DraftKings in the future attempt to gain entry in California again? That could be expensive. It could set the company back. So depending on those kinds of decisions will depend on how soon DraftKings can reach profitability. Finally, let's look at valuation, and measuring by the forward price to sales ratio. The two are very similarly priced, with DraftKings trading at a forward price to sales of 2.974 and Plug Power trading at a forward price to sales of 2.780. Interestingly, for the longest time, Plug Power traded at a significant premium valuation compared to DraftKings, but now DraftKings is actually more expensive than Plug Power. This hasn't happened since this is the first time in their history that this has happened, that DraftKings is more expensive than Plug Power. That being said, there is no relationship, a connection, a correlation between these two because they're in such different industries, but it's just interesting to observe that their valuation premium has flipped. Nevertheless, if I had to pick one of these growth stocks to buy right now, to buy today, I would be picking DraftKings. DraftKings would be my choice for explosive growth stock to buy right now. All right, but that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.